Hello everyone. So a few weeks ago I made a video about how David Hunter was predicting a very bullish and short-term melt-up, as he called it, in the stock market for the remainder of this year, 2020. He has been saying this would happen since the end of the COVID crash and even prior to this, and he is still predicting this will happen before the end of this year, even though we are nowhere near to the levels he is predicting. For perspective, for his melt-up, he is predicting the S&P 500 will rally to 4,200 to 4,500 at a minimum, and the nasdaq to 15,000 or higher. This is still a ways away from current levels, and many people might say that this is impossible or unlikely. But today I'll look into how this isn't as audacious of a prediction as it sounds, so stay tuned. Hi everybody, welcome back to the Contrarian. My name is Logan. I really like to talk about overall success in investing as well as going against crowd thinking. If there's one thing you can take away from my channel, it's that if a crowd is running after something, you should probably try to avoid that like the plague. But if you like these kinds of topics, just consider it. So firstly, let's look at the reasoning that Hunter gives as to how this bullish melt-up could happen. Basically, throughout all of the recent interviews and tweets he has made, it is clear he is counting on investors driving a fear of missing out stock market rally, as well as pent-up spending and demand. So let's look into these more. Basically, a lot of the more traditionally conservative investors have been out of this market rally since the crash in February and March, as they see this as a bull trap or dead cat bounce, and they don't see the market recovering. However, I think we could all agree that the stock market is more of a mental market at this point than a rational one. We've clearly seen this with stocks like Tesla, Nikola, Virgin Galactic being boosted to obscenely high valuations as investors fear missing out on the next big thing. So there's actually a lot of truth to what Hunter is saying here. As fear of another correction begins to grow dimmer in people's minds as the markets continue to close at more all-time highs, they begin to buy into the market, which pushes it higher, which causes other people to buy in, pushing it still higher. So it's really a domino effect. As for pent-up spending and consumer demand, I've mentioned this before, and how consumer savings are at all-time highs. However, I would also think that consumers could become more confident about their financial security due to, say, a vaccine or encouraging disease developments. This could be a major catalyst. Think of all the stimulus that has not been spent and is sitting in people's savings account. Now, I'm not saying that spending it is a good place to put yourself financially, and it actually would probably be best if consumers kept themselves in a more safe position, but I think Hunter sees major pent-up spending taking hold. This has the potential to send asset prices through the roof, but definitely only on a temporary basis. Now let's go into some more secondary reasoning behind this that Hunter has yet to mention, but that I consider very strong catalysts for melt-up as well. Let's firstly look at the fear of inflation in investors' minds. We all know that the Federal Reserve has printed unprecedented amounts of money, and that this will eventually come out in the form of inflation. You simply cannot increase the supply of money in such a short period of time by such a large amount without eventually having inflation. Because of this, investors everywhere are looking to get out of cash and into equities which benefit from inflation. Simply put, as the dollar goes down in value, stocks, gold, and real estate almost always go up in value. This has the potential to further drive the stock market up as investors fear losing value in their savings and want to put their money into stocks or gold or something else that has the potential to grow or at least preserve value. It doesn't even mean that inflation could actually be happening. People could just be anticipating inflation and putting more money into assets because of that. Another reason for a melt-up in the stock market comes from the potential catalyst that any positive vaccine news will have on the markets. Up until now, COVID has been a consistent negative downward pressure on the markets. We haven't been sure if there will be a vaccine for this disease, or if there will be, when it's going to come out and be massively available. However, we now know that there are 9 vaccines for COVID that are in phase 3 testing. And even though this still could be months away, any encouraging news with regards to a vaccine could be a massive catalyst. It would give investors optimism that the economy could fully reopen and that consumers would be confident about going out and resuming their normal lives. Now, the last but often overlooked catalyst for Hunter's melt-up is the coming election. Now, despite how little we've seen of it so far, this is now less than 2 months away. And if Republicans do well, this could be a major catalyst. We know that the polls are not indicating this, so the markets are likely beginning to price in what a Democratic administration could look like. And this could be a current weight on equity prices. With Joe Biden planning to increase corporate and private taxes dramatically, and with polls saying he is currently favored to win, this definitely could be affecting the stock market in a negative manner right now. However, should the polls be wrong again and Trump win a second term and Republicans do well in the Senate and House, this could be a major catalyst for a melt-up. Trump has consistently said he will do everything he can to keep the economy going and out of trouble, and has been in favor of negative interest rates for years now, as well as cutting taxes and regulations. So we'll have to see how this plays out, but it could be the catalyst that drives the stock market to the 4,200 or higher, as David Hunter is saying. Now, if you've seen some of my previous videos, I am predicting that Trump wins a second term, so in my mind, this catalyst is very likely to happen, but we'll definitely have to wait and see how this turns out. Regardless of how it turns out, it is shaping up to be the ugliest election probably in a while. But anyway, let me know what you guys think. Are you, as you probably know from my previous video about Hunter, he is not predicting that this melt-up will last long, and he is predicting up to an 80% collapse from there. So this is definitely not a buy and hold type of move he's predicting. Which of these melt-up catalysts do you think has the strongest potential? Fear of missing out, fear of inflation, vaccine news, pent-up spending, the election? Anyway, thank you for watching, and I hope to see you again.